would I find out profit? Then how would I get whether will I be able to do at a period or at a time? No, it's not possible for me. Then how to make my work simpler? So what I do, whatever transactions that are taking place regularly or daily, I will write or I will record all those transactions in a book, and the recording of those daily transactions in certain format, which I call them as journal entries, which I call them as journal entries. So daily, whatever transaction is taking place, I'll write. This is the transaction taking place. Cash account debit to sales account. Purchase account debit to cash account daily as per date and amount. Date and amount, I'll go on writing. So this is also not going to help me at a time to find out whether my business is getting profit or loss, because thousands of entries sometimes may lead to lakhs of entries. Then how to find out? So whatever entries I have made, which are called journal entries, I'll transfer them or post into a separate account, which I call them as ledger, which I call them as ledger. Then what is this ledger? Ledger accounts are T-shaped accounts. Just now we discussed the profit and loss account. Same, it will like that only. Credit will be there, debit will be there. Date column, particulars, amount, and JF number. So whatever entry I have written in journal entries, I will prepare account, each ledger account. If it is cash, cash account. Purchases, purchases account. Stationery, stationery account. Like this, I will prepare each item account, so that if the same entries are repeated, I will go on adding that particular. For example, if it is a sales account, so all the sales I will write in this account only. Every date, every month, go on writing in this. At the end of year, I will just balance it. What is my credit balance? What is my debit balance? Is it more or less? The difference I'll find out. So when I prepare, so what I'm doing with the help of this ledger accounts, at the end of the year, it is very easy for me to find out what is the sales I have done. What are the purchases I have made? What is the stationery I have incurred during this period? How much discount? So I will go on preparing the accounts related to each item, so that at the end of the year, if I just check their accounts that are called ledger accounts, I'll know what is the balance. Then next what I'll do, I prepare trial balance. Now, this also it's but not easy for me, because I turn all the accounts and go on check where I got profit or loss. So to make my work much more easier and simpler, I'll prepare trial balance. I prepare trial balance. So in trial balance, I will write all the ledger account. I said, no, I will prepare purchases account. I'll prepare sales account. I'll prepare rent account. Their balances. Rent means expenditure. Expenditure means debit balance. So I'll prepare a trial balance where I will write all debit balance and credit balance of each item, and I'll try to find out. From the trial balance, I will prepare the final accounts. That is trading account, profit and loss account, and balance sheet. Then I'll come to know whether my business is getting profit or loss. So again, next year, again I will write journal entries. Again I'll prepare ledger. Then I prepare trial balance. Then I prepare final account. This is called accounting cycle. This is called accounting cycle. So just now in one of the questions they given us, what to say, trial balance only. Wait, I'll show you that. Or this one. So this is called trial balance. This is trial balance where debit balance is credit balance. So how I could prepare this? It means ledger accounts I prepared, stock account I prepared, purchase account I prepared, returns account, carriage account, stationery account, rent account. I prepare all those accounts. From there, I am directly writing here in the trial balance. With this help of this trial balance, I'll prepare balance sheet. But if you look at here, there is another item below the trial balance. Could you see this? Closing stock on 31st March 2018 is 22,000. This is called adjustment. Means after preparing trial balance, whatever things we are not written in the trial balance, that are written below the trial balance, and these things or these transactions are called adjustments. What do we call them as? We call them as adjustments. So now look at here. There are few adjustments or adjustment entries given to us. Closing stock. This normally will come to know after preparing the trial balance. So whenever this balance is given, it means, and remember, all adjustments will have two effects. All adjustments will have two effects. One will be debit effect, the other one will be the credit effect. One will be the debit effect and the other one will be the credit effect. Closing stock. First, we'll write in trading account credit side, because stock which has to be yet to be converted into sales. And the other one, it is an asset to us. It's an asset to us. So we write in the balance sheet. So whenever closing stock is given in the adjustments, the one effect we write in trading account credit side, the other effect balance sheet asset side. Next we have outstanding expenses. So outstanding expenses means the expenses which are due or which are not yet paid or which will be paid in future. So this, as I said, every adjustment will have two effects. So here outstanding expenses, whichever expense, for example, they give an outstanding salary. So salary means outstanding means to that respective expenditure. To that respective expenditure, we will add it. The first adjustment will be, we will add to the respective expenditure, whether it may be trading account or profit and loss account. And the other effect, we take it in the balance sheet liability side. Why? Because outstanding means yet to be paid, but we have not yet paid. So that is nothing but liability. So we show in the liabilities all outstanding expenses. The first effect is we will add to the respective expenditure, and the other one is we will write in the liability side. For example, if it's an outstanding, for example, it is an outstanding rent. It is related to which expenditure? It is related to rent only, na? So we'll add to the rent first. The other effect we write in the balance sheet liability side. Next we have prepaid expenses. This is outstanding expenses and this one is prepaid expenses. Prepaid expenses means, outstanding means which is not yet paid. Prepaid expenses means which is paid in advance. For example, whenever we take our mobile phone, we mostly go for prepaid. First we will pay, then we will use it. So here prepaid expenses means paid in advance. So it means the expense which belongs to the next month or after month, you are paying in this month. It means it does not belong to the present month. Am I right? So when it is not belongs to the present month, in that case, it should be deducted. We take only those expenses which belongs to the present month. So what we will do? We will deduct it from respective expenditure. For example, prepaid insurance is given to us. Prepaid insurance. So it is related to which expenditure? Insurance. We will deduct it from the insurance. Whether it is trading account or profit and loss account. The other effect will be shown on the balance sheet asset side. That is current assets. Why? Because here, who is due to us? Is the insurance company, or we prepaid means we paid in advance? Means here the insurance company is due to us, which is belongs to the future period. So in that case, we'll show it on the asset side. Next, depreciation. Depreciation means it's an expenditure which we will show in the profit and loss account debit side, and the other effect is we will deduct it from the respective asset. For example, depreciation on furniture means there is a decrease in the value of furniture. So furniture value should be decreased, and the other effect should be shown in the profit and loss account debit side. Next, bad debts. So bad debts means, as I said, these are created because out of credit sales. Further increase in bad debts means already there are some bad debts in the books. Again, we want to increase it. So whenever we want to increase the bad debts which already there, first what we will do, whichever bad debts are there, to that we will add it, which already there in profit and loss account debit side, and it will be deducted from the sundry debtors. Next, provision for bad debts. Again, it is debited to the profit and loss account, and it will be deducted from the sundry debtors. Provision for discount on debtor. This is debited to profit and loss account and deducted from the debtors account. Reserve for discount on creditors. It will be creditors is the income which we should pay to others. So we will, whenever the discount is given by them, it's an gain to us. We will write on the profit and loss account credit side, and we deduct it from sundry creditors. Now, accrued income. We have studied outstanding expenditure, that all are outstanding expenses, prepaid expenses that are related to the expenditures. When it comes to the point of income, we call it as accrued income. Accrued means the income which is yet to be received. Outstanding means the expenditure which are yet to be paid. Accrued income means the incomes which are yet to be received. In that case, we will add to the respective income on the credit side of profit and loss account, and we show it on the balance sheet asset side, because the income which has to be received. Next, we have incomes received in advance. For expenses, we are calling it as prepaid, but for incomes, we don't have any such thing. We call it as pre-received income or incomes received in advance. Means it does not belong to the present month or year. In that case, we will deduct it from the respective income and we show it on the balance sheet liability side. So these are the 10 adjustments that has to be kept in mind when we are preparing the trading account, profit and loss account, and balance sheet.
Okay.
Is it clear?
Yes, ma'am.
Yeah, it may take little time to understand when we go on doing little problems, few problems related to those things, you will be able to understand. So now let's look at one full-fledged problem where we can understand with adjustments along with total full problem. I think they have not given any illustration. Yeah, I think we can do this one. Can we?
Yes, ma'am.
Yeah. Look at illustration number 5. Fifth question. From the following trial balance of Sri Ramnath Traders, a sole proprietary concern, prepared trading and profit and loss account for the year ended 31st March 2018 and balance sheet as on that date. So they given stock on 1st April 2017 means it is opening stock. It is opening stock. Opening stock is written in the trading account debit side. Next, Ramnath's capital. Capital is written on the balance sheet liability side. Next, drawings. Drawings are taken in balance sheet liability side, deducted from capital. Next, purchases and purchase returns they have given to us here. So this is taken on trading account debit side, purchases and deducted returns. Again, sales return, sales. This is taken in trading account, credit side. Sales minus sales returns. Next, we have wages. Wages is a direct expenditure. Direct expenditures are taken in the trading account, debit side. Salaries is an indirect expenditure. This is written in profit and loss account, debit side. Next, we have cash. Otherwise, I'll make it small so that you can even. Do you have the textbook? Do you have textbook?
Yes, ma'am.
Are you following that, or you were looking only the screen?
No, I opened my textbook.
Both, na? Because I am not displaying your solution. You can simultaneously check whatever I'm telling. Okay. Otherwise, I'll make the screen little smaller. I think it's not visible that much.
Okay.
So next we have wages. Wages is a direct expenditure, trading account debit side. Salaries, it's an indirect expenditure taken on profit and loss account debit side. Cash, it's a asset taken on the balance sheet asset side. If they are following the liquidity format, then it comes under current assets. Bank balance, balance sheet, asset side. Freehold premises, balance sheet, fixed assets, asset side. Trade expenses, profit and loss account, debit side. Professional fee, commission receipts and income to us. So profit and loss account, credit side. Investments as on 1st April 2017. So it is a asset which will be written on the asset side. Interest on assets. This I have to explain. There is an adjustment with regard to this. Sundry debtors is an asset. Sundry creditors is a liability. Income tax will not be taken anywhere. Next, we have discount allowed and received. So discount allowed is taken on profit and loss account debit side, and discount received is taken on profit and loss account credit side. Office furniture is an asset, which is fixed asset. Printing and stationery, profit and loss account debit side. Rent and rates, profit and loss account debit side. Insurance, whether they did not mention life insurance or fire insurance. Let's see the adjustments. Advertisement expenses, profit and loss account debit side. Bad debts and provision for bad and doubtful debts. So debit side they given as well as on the credit side means already existing. Bills receivable and bills payable. Bills receivable is an current asset. Bills payable is an current liability. Rent received is an income. So what we thought, wages we don't have any adjustments, but you look at here we have wages still unpaid. Unpaid means outstanding. Whenever it is an outstanding expenditure, first we will add to the respective expenditure. What is the expenditure here? The expenditure is wages. So in trading account, debit side, already we might have written wages 24,000 in the inner column. To that we will add this 6,000. So 30,000 we write in the amount column. What I said, all adjustments will have two effects. All adjustments will have two effects. So the first effect is I will add to the wages, trading account debit side. And what is it? Still unpaid means what is the meaning? It's an outstanding, which we have not yet paid. Means it's a liability. So other effect we will take in balance sheet, current liabilities, outstanding wages 6,000. So first effect is we will add to the wages, and the other effect is balance sheet liabilities. Under current liabilities we will write outstanding wages. Next we have stock on 31st March 2018 is 95,000. So this stock is closing stock. This stock is called closing stock. And as I said, two adjustments, two effects will be there. So the first effect is trading account credit side we write by closing stock. And the other effect is balance sheet asset side. Under current assets we will write closing stock. Under current assets we write closing stock. Next we have write-off of an annual depreciation of 5% on premises and 10% on furniture. Depreciation means decrease in the value of asset. My asset value is going to decrease. So which assets they are telling? Premises and furniture. So whenever depreciation is given, it's an loss to us. So what we will do, we write in profit and loss account debit side, to depreciation on premises 5%, to depreciation office furniture 10%. Means if you look at here, where is premises? Office furniture will see 5,000 is given. So what I'll do, profit and loss account debit side, to depreciation on furniture 5,000 10%, 500. Which value is decreasing? Office furniture na? Office furniture is an fixed asset. So I'll go to balance sheet, asset side. From the office furniture, I will deduct. You can see here. Where is office furniture? See. Is it clear?
Yes, ma'am.
This is second effect. The first effect is here, depreciation on furniture and premises. And the next one is we will deduct from the respective assets. Next, that is true effect. Insurance to the extent of 600 relates to the next financial year. Means it is nothing but prepaid, paying in advance. Next year, we are paying for current only. So in that case, first what we will do, this is called prepaid insurance. We will deduct it from respective expenditure. What is the value of insurance given to us? 3,100. From this, we will deduct 600. So our amount will be 2,600 it will be. 2,500. 3,100 minus 600, 2,500 will be insurance amount. Then where is the other effect? Here what we are doing, we are paying in advance. It means the insurance company is due to us. Means it's an asset to us. So we write under current assets, prepaid insurance 600. You can see here. Under current assets, see prepaid insurance 600. This is the other effect. Next. Further bad debts are 1,000. If you look at here, already bad debts is how much given to us? 2,000. Yes. So how much they want to increase? They want to increase one more 1,000. So it will become 3,000. You can just look at here. Bad debts already is existing 2,000. And additional how much they are asking? 1,000. So I've added it is 3,000. So that is one thing where we added to the bad debts. Bad debts are coming because of what? Bad debts are arising because of credit sales. Credit sales means debtors. So this extra 1,000, I will deduct it from debtors. You can just look at here. Sundry debtors, additional bad debts, 1,000. Next. Provide for bad and doubtful debts, 6% on sundry debtors. Now look at here, what is the value of sundry debtors? 48,000 minus 1,000 comes to how much? 47,000. Yes. On this 47,000, I have to provide 6% provision. So 47,000 into 6% comes to how much? 2,820. You can see here. Is it clear?
Yeah, okay.
So here what we are doing, whenever provision or provision for bad and doubtful debts is given, and bad debts is also given, there is some sequence. Bad debts, provision for bad debts, discount on these three are related to sundry debtors only. You can see here. Just give me a second. I'll show you. Yeah. See, bad debts, provision for bad and doubtful debts on sundry debtors, discount on debtors. These three are related to debtors only. Sundry debtors or debtors are one and the same meaning. So when these three are given, which are related to debtors, there is a sequence that if bad debts is given, provision is also given, discount is also given. In that case, whenever debtors amount is there, first we will adjust the bad debts amount. We will deduct. So it was 48,000 minus 1,000. The balance is 47. On this, we will calculate the 6%, not on 48,000. After deducting the bad debts, we will calculate the provision. That is 6%. So 47,000 into 6% comes to 2,820. That's what they given over here. You can just look at here. That's what they given over here. Now next, provision discount on debtors is given. So now how to do, what to do? 48,000 was debtors. On this bad debts was 1,000. I'll deduct it. So I'll get 47,000. And this 47,000, I am calculating provision for bad debts, that is 6%. So I am getting 2,820. So when I deduct this, 47,000 minus 2,820 minus 2,820, it comes to 44,180. On this, I will calculate the discount amount. What is the discount percentage given? Discount on debtors is 3%. Discount on debtors is 3%. So 44,180 into 3% comes to 1,325. Are you able to understand the sequence?
Yes, ma'am.
Yeah. So first bad debts. Then on the balance, we'll calculate provision. On that balance, we'll calculate the discount on debtors. For example, bad debts is not given. Discount is also not given. Only provision is given. So in that case, directly on 40,000 only we will calculate. Okay? Or sometimes there is no provision. There is no discount. Only bad debts is there. So we'll only deduct 1,000. Nothing else will be existing. For example, we don't have bad debts. We don't have any provision. We have only discount. In that case, directly on 48,000 only we will calculate the discount. This sequence comes only when we have these three. For example, we don't have any provision. We have only bad debts and discount. So in that case, directly on 47,000 we will calculate the discount. But this is the sequence you have to remember. Now we have calculated bad debts done. Provision already is there now. If you look at the trial balance, there is 1,600 provision. Now what is the provision we got? 2,820. Then how to adjust this one? Just look at here now. Already old provision is 2,000. Now actually old is how much? Is it visible? 1,600?
Yes, ma'am. 600.
This is whenever actually provision means it is not an expenditure. We are keeping some amount. Means nothing but savings. We are keeping some savings which may arise in future or not, we do not know. But actually how much provision should be made? Provision should be made 6%. We should make provision of 6%. 6% is coming how much? It is coming to 2,820. But how much he has saved here? 1,600 only, na?
Yes.
So else some more he has to save it. So that adjustment we are making. Provision for bad debts required is 2,820. Already how much provision we made? 1,600. That we are deducting and the difference will take here as an expenditure. Is it clear?
Yes, ma'am.
Yeah. Next discount is there na? One effect we are taking in the debtors we are deducting. The other effect, provision on discount on debtors, we write in the trading account, profit and loss account, debit side. So these are the two effects of these three things. Discount on creditors is also there. So creditors value is given how much? 35,000. So 35,000 into 2%. One effect we deduct it from creditors. See, you can see here reserve on discount on creditors 2%, 35,000 2%. We'll deduct it. The other effect we show it on the profit and loss account credit side. Reserve for discount on creditors 700. Now there is an, I said whenever I was telling investments, if you look at here, 10% investments as on 1st April 2017. I said we have some adjustment that I'll explain. I said yes. So investment is an asset to us. Whenever we invest somewhere, what do we expect? What is the purpose behind investments?
Interest we get.
Interest. We receive some interest. Yes or not?
Yes.
So, but if you look at here, 41,000 is our investment. What is the rate of interest? If you look at here,
10%.
10%. Rate of, you can see here, 10% investments. So our rate of interest is 10%. 41,000 into 10% comes to how much? 4,100. But if you look at here, interest on investments, how much we received as interest?
2,100.
Actually, we should receive how much? 4,100.
100.
But how much we received here? 2,000. Then what about remaining 2,000? Where it went? Have we received? Have we received?
No,
we have not received. Our income has, interest on investment is our income because we have invested somewhere. Whatever interest that we have to receive, but we have not received total interest. That is called accrued income. Outstanding. For expenses we call outstanding. For incomes we call accrued. Means incomes to be received. Have we received total? No, we have not received.
No.
So what should be done? It is called accrued interest. See, if you see here, anyway, they have not mentioned anywhere. Not even adjustments, not even question. But by reading this, you have to understand. 10% means 41,000 into 10%, 4,100. But how much we receive? 2,100 only we have received. Means remaining 2,000 is accrued interest. Accrued interest means income to be received, which we have not received. Incomes to be received means we have to add to that income. So you can look at here. Interest received, interest on investment 2,100. Add receivable interest 2,000, which we have not yet received. So 4,100. I said every adjustments will have two effects. This is the one effect. Yes. The other effect, investment is an asset to us. To that asset, we will add it. Can look at here. Where is that? See, 10% investments. They have written separately, or we can add it directly. Interest due thereon 2,000. You can add directly here and write on the outer column 43,000. Is it clear?
Yes.
That's it. This is how you'll get a full-fledged problem in the exam.
Okay.
Any more doubts with regard to this? Anywhere, any question? If you find any doubts in this, you can ask me in the next class. Practice it. Where you are not able to understand, you can ask me in the next class.
Okay. Ma'am, I have one doubt.
Yeah, please.
In assignments, we write in only answer in one page or back to back we can write or not?
Better that you, that actually it's a live session, we can't, but I'll explain you in the next class. Is it okay?
Okay.
Okay. So this is about the preparation of trading account, profit and loss account and balance sheet.
Okay.
And introduction to company accounts is given. That we'll discuss in the next class.
Okay.
Just give me a second. So I'm stop sharing, and then